if you've been an investor in gold in the recent few days, today was a spectacular day. Like you've noticed something very unusual that happened in the gold futures market or any gold market today. Now, what happened is the CPI readings came out. CPI readings came out worse than it was expected, and the gold futures tanked. And this was around the 8 o'clock mark. So what followed through was something unusual, and I say unusual because the market was trading around the 1675 mark for the last couple days. And this is actually since Monday. The market's kind of just been hovering up and down in that range. But around the 8 o'clock mark this morning, the market just tanked down, went down towards the 1648 mark, which is a new low. It hasn't been to this level for quite some time. And it then flipped back up to its 1672 mark. So this is again unusual, as I said, and something that we probably wondering is that what is in store next? Where is gold heading towards in the coming days? So let's analyze that, look into it a little more deeper, and see what's in store in the next couple days. So this is the 1 hour time frame that I have in front of you. I'm just going to go towards the daily time frame so you get a better perspective. So this is how gold's been trending. So gold's been moving lower, and that's the overall time frame. So I'll just go quickly to the weekly time frame. As you can see, the gold peak around the 1999 2000 mark. So this is where gold formed a double top, and it doesn't seem to be very clear. And like what I'm trying to do here is show you price action trading, and this is where we look at the actual candlesticks and analyze what the market is heading into, what's the future forecast for the market, without getting into any of the lagging technical indicators. We do look at a few, but our focus is more on candlesticks, which give us a more true picture of the actual market direction and the I would say the direction that the market's heading in. So this is a double top that we see here. It's not so clear because it did an intraday, but it's still considered to be a double top because the top, intraday top, is pretty much the same. What followed through is a decline, which is something similar to if you've studied candlestick patterns, that's what you should be expecting. So if you were a long-term trader, this was a perfect opportunity for you to short the market. So if you short it around here, you would have made a lot of money, 2,000 to 1,600. If you were trading futures and you're putting in a lot of contracts in, you would have made a good sum of money out of it. So ignore the fact that this was a long-term trade. This is a weekly chart. So what you see here is that the market's headed downwards towards the 1,800 level. It then bounced back up, so it pierced through the 50-period moving average line, which is a purple line that you see on your screen. Went back up there, then went down again towards the 200-period moving average line. So the three moving average lines that the markets respect the most is the 50, the 20, and the 200. So just keep an attention or pay an close eye to those periods, because that's where the markets or the analysts or anyone that's trading the market usually pays attention to. And again, the weekly, daily, the 4 hours and the hour time frames are also important. Now there will be day traders trading like the lower time frames and kind of like scalping the markets, but the big money, the banks would look into the weeklies. They don't kind of flip-flop in the daily unless if you're a day trader or like a proprietary trading firm and things like that. So the market moved down towards the 200-period moving average line, then bounced back up, touched the 20-period moving average line. So, and this is peculiar. So this is, the market never goes down like a V or like a W. It keeps like oscillating, and that's the pace of the market. The market never just goes straight down to the 200. It'll kind of like oscillate. So you got that? So that's what the market did. It moved to it pairs to the 50, moved to the yellow, which is the 20, and then moved down to the 200, and then went back up to the 20, and then moved down here. So now this is important because the markets do respect the 200-period moving average line a lot. And that's what's happened here. So the markets touched the 200-period moving average line. it went through it, and now it's just hovering on over it over here. So what's in store? So let's see what is in store for the market in the coming days. So this is the daily time frame. Again, I have it in front of you. The market it seems to be like, it may possibly touch the 1649 mark again, and it may go down to the 1628. But something to keep in mind is the weekly time frame. So this is the 200 period moving average line. It may just have a tendency to oscillate around the 200 period moving average line before it decides to go anywhere. So just keep it in mind. There would be a range in this between the 1640 and the 1712 that the market may hover around until it clears through the 200 period moving average line. How would you tell it's cleared the 200 period moving average line and then heading into an upward direction or lower? You have to make sure that the weekly candle, this is the weekly chart that I have in front of you, the weekly candle should close without touching the 200 period moving average line. What I mean by that is, say the market, so this is the weekly candle, it would start here and close here without touching the 200 period moving average line. Or if it closes the week below the 200 period moving average line without touching it. So the green candle here is a good example. Now, ideally, this one has not touched the 200, so a lot of the traders would be under the impression that, oh, the market's going to be heading down, it's clear to the 200 period moving average line. Now, what the market did was that it closed it with the green, so the market went down and went up. So it should generally close with a red candle below the 200 period moving average line, and that's a good sign that the market's heading in the lower direction. In this case, it does not happen yet, so just be cautious. The market may be a little bit range bound. It's enough to swing trade on the daily time frame. So as I said, it's enough to kind of like buy and sell around this line, this time frame. But I would advise you against going too far away from the 50 or the 20 period moving average line. Right? Why? Because the market may just decide to bounce back out of it and go up here again. So you don't want to get stuck shorting the market around here thinking that the market's going to drop down further. It's easier or better to have your stakes here where you could short the market here and put your stop losses just around the top of it. Even here, the market, don't ever short the market directly on the 50 period moving average line, because you never know, is the market going to respect it or not? Is it going to go up towards the 200 period moving average line just like it did here? So you always have to wait for the next candle to kind of confirm that's the direction that's heading into. So if I was shorting it on the daily time frame, this is a good time frame where I would short it. So I would just wait for the candle to close. This is where I would get in. So the third day. So always the third day. Never over anticipate and never predict what the market's going to do. Follow the trend and see where the market's heading into, and then make your decision. So I hope this was helpful. Just gives you a little perspective from a price action perspective. I don't see a lot of people, talking about it from this is the candle, this is where it's heading into. So this is just me giving my thoughts. So if you'd like me to talk about a different stock or a different chart, just do let me know. Send me a comment, and I'll be happy to provide my thoughts on it. Again, this is just for educational purposes. Don't invest your money just based on what I say, but use it as a guideline to make your own decision. So I hope this was helpful, and I hope to see you in another video very soon. And with that, stay tuned.